Binance reacts to the European MiCA law and will remove stable coins from its exchange. Is Tether's hegemony over? Bitcoin and cryptocurrencies are showing a very bullish trend. Can we really believe this rise?
Binance is preparing to implement new and stricter measures in an effort to comply with the new European regulations. Binance announced that it will implement new restrictions for trading certain stable coins to its users in Europe. The announcement cites the Markets and Crypto Assets Regulation, MiCA, the European Union's regulatory framework for cryptocurrencies, whose provision related to stable coins will come into effect at the end of June. Without going into details, the platform hinted that the availability of stable coins deemed unregulated will be limited for users residing in the EU member countries. Only tokens issued by regulated companies will be available to the public. It is possible that several existing stablecoins will not fall into this category and therefore will be subject to certain restrictions. The measure will be applied progressively over the coming weeks, although Binance has already urged users to convert their holdings in unauthorized stablecoins to other cryptocurrencies like Bitcoin or Ethereum. According to the report, the option to purchase unregulated stablecoins in Europe will be disabled starting June 30th. The company did not specify which tokens will fall under this category, but it could include USDT issued by Tether, the largest stablecoin in the market with a current capitalization of over $100 billion.
And this is where we need to study the implications that Binance's potential removal of USDT from its exchange might have on the crypto ecosystem. We need to start from the following premise. If Binance is making this legislative decision, it's prudent to think that other competitors such as Coinbase, Kraken, BitGet, and Binance might follow Binance's direction over time with the sole intention of staying on the right side of the law. It is then that we need to consider what might happen if exchanges are forced to do away with the predominant stablecoin. Surprisingly, we believe that it shouldn't be so catastrophic, as we would likely see USD by Circle taking the throne. We all know that USD has always been very aligned with legislation, especially US regulations. It's worth noting that US legislation is already among the strictest, so we can assume that it may also be very aligned with the European MiCA law. Therefore, while it may sound alarming and cause some market fear that Binance might remove Tether, if we take a moment to think, life goes on. And now, let's hear what our new colleague at Crypto Insight has to say about Bitcoin.
Now, let's analyze Bitcoin, and to put it into context, let's look at the daily time frame where we can see that Bitcoin is still moving within an upward channel. At the same time, after the big downward impulse, we can see that we are now in a corrective pattern. This corrective pattern is currently moving in a macro Z. And as we can see in Ethereum, it clearly shows that we are also going through our corrective pattern where we can see the W, Y, and Z. Remember, all this is on a macro level. Returning to the Bitcoin chart, we will now analyze the Z more closely to understand what is happening at this moment. Viewing Bitcoin on the hourly time frame, we can observe another downward impulse followed by another corrective pattern where we can also identify a micro Z that is developing right now, and it's in the form of a wedge. Due to the nature of the Z, we cannot yet consider it finished. We will have to wait for this wedge to break and break strongly, which would mean that the Z can still keep rising. What also gives us strength to interpret that the Z can continue to rise is an impulse, a channel, and currently forming is a range that could still provide a climactic action. This range is still in formation, so we cannot yet say it is complete, and therefore assume that the Z has also ended. To make it clearer, on the 15-minute time frame, we can distinguish the impulse, the channel, the range, and the climactic action we are expecting, or that we could expect, and place it at this point, or even make a trap above this point, which is the last high, the closest high. Therefore, we can expect the Z to continue developing upward, to then wait for the climactic action, even in a trap zone above our last high, to then break the wedge strongly, and then come to seek its guideline. Here on the guideline, we could then be waiting for a corrective pattern, which would then impact the guideline. Here on the guideline, we could then expect a correction that would eventually break the guideline definitively. So what could we expect in the short term for Bitcoin? That the Z continues to develop upward to reach or even exceed $72,000 in a trap form and then look downwards.
Thank you, Eugenia, for that Bitcoin analysis. Now, let's continue with this Ethereum chart on its daily time frame. As we explained a moment ago, we are working on a complex corrective pattern where we are currently in the middle of a Z upward movement. Keep in mind that this Z, and zooming into a 4-hour time frame, previously we have been observing a very aggressive wedge. This wedge has already been broken with great aggressiveness. It worked on a small correction, and here we find the macro guideline of the Z. In other words, this is the line that protects us for a long-term view to remain positive on this asset. Now let's focus on the medium term. Look, regarding this downward impulse, we have also been working on a complex corrective pattern where the Z seems to be consuming a lot of time, and this event is making us a bit wary. However, what we want to convey is that the Z, as long as we do not have adverse structural breaks, meaning as long as we do not lose this defense zone, the Z, due to its nature, will continue with a bullish out. Note that we are already talking about a Z within a Z, but if we go to the hourly time frame and focus on the short term, we will see the following. We have been following a strong bullish impulse accompanied by a channel. Regarding this bullish channel, we have seen the very interesting price level of $3,826. Notice how its price has suddenly impacted and recognized this structure. Now, I want you to focus on the following. In the sessions we conduct almost daily and live for our Crypto Insight community, we observed when the price was approximately at this point that it was a very good idea to wait for a bullish impulse as a trap of the structure, and in this trap scenario, we could then look for a short-term trading idea. In Ethereum, any excess here can also be good for looking for a short-term trade. Similarly, in Ethereum, we seek these types of opportunities, and in the same way, we have been observing in a Crypto Insight live session that when we had a guideline passing through these levels, and when the price was already breaking the structure and making a test, what we wanted to see was an overcoming of the previous high. And in that overcoming, here, look for a short in the market. Just like with Polkadot. Hey, if it goes up a bit more and exceeds this high, no problem. What seemed like a flat pattern breakout? Well, that needs to be sold because it could be the limit point of the fall for Polkadot. So, to cross-check the analysis, if our colleague explained earlier that we are experiencing a Z in a wedge, which at the same time is part of a smaller time frame pattern of impulse, channel, range, climactic action, we might expect, hey, can we keep going up? Why not make a trap on that structure and then start looking down? To summarize, and this is what Ethereum invites us to think, well, hey, can we get to break the creek? And here, frankly, we don't know if it will be to make a slight trap and then turn around, or if it will take a lot of initiative to go to an institutional target before turning around. But in the end, what we are really expecting is that sooner or later, they will make a trap to then start a bearish phase in Ethereum. It should be noted that losing the defense zone would ruin any institutional narrative of defending bullish ideas, and that would add a lot of fuel to looking downwards. Here, we would at least expect Ethereum around $3,660. And a quick look at what represents altcoins. We would then see Cardano. Why not at some point come to visit that structure? If they want to make a trap, let them, but we are already visualizing when we can look down. Remember, we are in a bullish Z and will keep going up. We are speculating on where the price might want to reverse, knowing the danger of trying to turn the market around. But what the charts and their cross-analysis tell us is what we are conveying to you. Similarly, with Solana in this 1 hour chart, we could expect it to keep rising. And hey, what would our boundary be? In the end, it would be this whole POC we obtained from the trace of this volume profile of a distribution process. So, friend, of course, we can let the price go up for the end of Z hypothesis that drives us downwards to prevail and continue. We can't let this level be broken. That's why we won't be scared if we keep going up. But if we believe the bearish idea should gain strength, this structure in Solana is what we must not lose. Here we could then expect the continuation of a bearish path. Regarding Polkadot, well, hey, we could break this creek as a trap even. Why not reach around $7,391? In the end, it's a POC that comes from this redistribution. That's why we can give crypto room to rise. Remember, Bitcoin could still offer a tricky climactic action before reversing. That's why we give crypto room and see how far they could go to evaluate the option of the market turning around in the short term. You need to keep in mind that we are speculating. These are all ideas, and at no point will we commit to a specific direction. It's crucial and important not to have any ego with our ideas, as we are very clear about which levels, if significantly surpassed, could break any hypothesis of looking down. If we see that happen, then we will look to position ourselves in a long idea. Remember, we are in a Z. It can rise as much as it wants, and we owe ourselves to what the market wants to do. If you found this advanced technical analysis interesting, let me know in the comments. Also, like the video, subscribe to the channel, and click the bell so YouTube will notify you of future publications. Good luck with your trading, and I'll read your comments to see how warmly you welcome our new colleague at Crypto Insight. Until next time.